Hola y bienvenidos a tu programa ISM, Inversiones sin Miedo. Hoy día es un día muy especial. Tenemos otro programa en inglés porque hoy me acompaña Markus Heitkoetter, quien es un hombre que ha sido completamente exitoso en el mundo del trading, ya que creó su propia empresa, que ahora vamos a hablar con él y nos va a contar un poco cómo fue esa aventura, porque es un hombre alemán que se vino a vivir a Estados Unidos, a Austin, Texas, pero lo traigo acá al canal para que nos cuente un poco más. Así que adelante. Hello, Marcus. Thank you so much for being in the show. ISM, Inversiones sin Miedo. It's a show that actually helps every single person who would like to learn more about investments. And for this opportunity, I am so grateful to have you here in the show. Welcome aboard.
It's so good to see you again. I know that we met in Orlando in person, right? Took a
Yes,
picture together, and
yes.
it's so good. I love what you're doing with the channel. It's fantastic.
Thank you so much. Thank you so much. And actually, before we start our conversation, I would like if you can give us a little bit about your background, so the audience can see who you are, they can know you a little bit more.
All right. Well, so I'm Marcus. Originally, I'm from Germany, and you see, in Germany, I grew up how everybody else does, right? I mean, you go to school, you get good grades in Germany, then you go to college, you get good grades, and then you get a job, right? And you get a job with a reputable company, and that's what I did. It was with IBM. After college, I started with IBM. And I climbed up the corporate ladder, and then I was working 50, 60 hours a week.
Yeah.
And you see, this is when I heard the quote, if you are not rich, you're making somebody else rich. And so I thought, wait a minute, I'm not rich, so this means I'm making somebody else rich. So I read this book, Rich Dad, Poor Dad, right, from Robert Kiyosaki, where he has the four quadrants, right, where you're either E, an employee, or you're self-employed, or you're a business owner, or you're I, an investor. And see, the difference is, as E, an employee, I was working hard for my money. And as an investor, you have your money working hard for you. And I thought, that's genius. I like this. So this is why I got interested in trading and investing. And that's when it all started.
Oh, wow. So what basically inspired you to leave IBM? I know that book inspired you, but anybody, any friend told you about trading? How did you get into the trading?
Well, I mean, this started way earlier. And I mean, this was when I was still in high school, and this was back in Germany. Do we have a minute to that I can tell
Sure,
the
of
story?
course.
Okay.
All the
So
time.
I'm in high school, right? I'm fascinated with trading. I'm reading books. And this is where I decide, okay, I need to open a brokerage account. Now, this was 1989. We
Wow.
didn't have any online brokers. So the only way to do it, you had to go to a bank. And in Germany, it's Deutsche Bank, right? So I went to a banker's office and I said, I want to open a trading account. And he looked at me, high school kid, and he said, how much money are you planning to put in the account? And I said, all the money I have, 50 Deutschmark. That's kind of like $50, right? And he said, no, we can't do this. But I was very, very persistent. I wouldn't leave his office until he finally opened the brokerage account. And he said, okay, so now it is open. What stock do you want to buy? And I thought, ooh, I haven't thought about it. So I asked him, what stock can I buy for 50 Deutschmark? And he said, well, the stock that is trading at 50 Deutschmark right now is VW, Volkswagen, the car manufacturer. And I said, all right, let's buy it. So I bought one share of VW. So the next morning I was back in school, right? And we didn't have cell phones where we could check the quote. So during the first recess break, I ran to a payphone. I inserted my 20 cents, called the banker, and I said, how is my stock doing? And he said, well, it is up to $50.20. And I thought, this is great. So during the second recess break, the same thing. I called him again and asked, how are we doing right now? And he said, well, 50 Deutschmark and 40 cents. I said, this is great. So as soon as I got home, we had this rotary phones, right? Again, 1989. So I called the banker again and said, okay, markets are closed. How did we close today? And I said, well, we're up to 50 Deutschmark and 50 cents. I said, this is amazing. So Next day, the same thing. I called him again during the first recess break, the second recess break, and also as soon as I got home. No, on the third day and my seventh call to the banker, he said, Markus, let me ask you this. How much money do you want to make with this stock? And I thought about it. I thought, if I could make 10 Deutschmark, right? I mean, this would be 20%. That's pretty good. So I said, I want to make 10 Deutschmark. And he said, done. I'll give you the 10 Deutschmark, but stop calling me. So this was my first trade. It was a profitable trade. However, I realized that is not a sustainable trading strategy to bug your banker until he gives you the money. And then this is why I went to college, right? And my parents convinced me to go the traditional route. So you asked me, what was the deciding moment when I decided to leave IBM? And this, I was on a project in Vienna. And it was late when I got back to my hotel room, right? And the hotel room, it was dim because these hotel rooms never have a lot of light, right? And at home, they were celebrating a friend's birthday. And I realized they didn't even invite me. Why? Because I always said, I'm too busy. I have to work. I have to catch up on a project. I'm traveling, right? And this is where I decided, no, this is not living, right? I want to change something. And this is where I decided to be drastic and change everything, quit IBM and moved all the way from Germany to Austin, Texas to
Wow.
become a full-time trader. Now, I came there with $30,000 in my pocket, and this is how I got started. And trust me, it wasn't easy in the beginning, but I must also say, I mean, it sounds so gutsy. You left IBM. I was 33 years old.
Oh,
I
you
mean,
were very young.
I could have gotten back and get a job again, right? So it wasn't as risky as it sounded. But hey, here I am 23 years later, still in Austin, Texas.
But you were not afraid that you were going to lose that money, all that money. So you just jump into Austin and say, you know what, I'm gonna risk, and I think I'm gonna make it.
Oh, you see, Ricardo, this is where you hear all of the success stories, right? I mean, back in the days, this was 2002, right? I mean, yes, we already had YouTube, and there's all of these courses and the emails that you're getting where it sounds so easy, right? And I believed it. So I thought trading is not that difficult. I thought I'm a smart cookie. I mean, I went to college. What can possibly go wrong? But yeah, I started with $20,000, and within a few months this account dwindled down to $8,000. So yeah,
Wow.
I lost more than half of the account. It wasn't a massive loss. It was just a bunch of small losses that added up, right? And every now and then I would catch a great big trade and then loss after loss after loss after loss.
What type of a strategy you were using at that time?
Oh my gosh, the strategy that I was using is that everybody was preaching. Make 200% on a surefire trade, right? I mean, this is where I was trading stocks. And then I also decided to go into futures because I thought, oh my gosh, the markets move so quickly. You can make millions in minutes, right? And yeah, you can also lose a lot of money. See, I had this weird idea because I was fed by it by webinars and YouTube that you can risk $100 and make $1,000, $2,000, that you can turn $2,000 into 2 million by trying to catch the next big wave. And I realized it doesn't work this way. I mean, while you're trying to catch the next big wave, you're experiencing stop out after stop out after stop out.
Exactly. No, that happened to me, when I started in like 1999, it was incredible because the market was going up, and all of a sudden went down. So Marcus, today I read a lot about you, and actually I saw you in Orlando, and I love the study that you normally do. I'm gonna tell everyone you like the wheel. Is that right?
Yeah, the wheel strategy. You see, that's a great strategy for me. And you see, this where everybody's asking me, Marcus, what is the best trading strategy? And the best trading strategy, Ricardo, is the one that lets you sleep at night. If you're waking up in the middle of the night worrying about your position, you're trading the wrong strategy. So for me, the wheel strategy is perfect because what I have been looking for many years is a way to generate what I call SRC profits: systematic, repeatable, and consistent. So I'm no longer going for the home run. right? I'm taking small profits, but consistently.
But you know what? I'm gonna be very honest to you, and I told to a lot of my every single person who was in this show. I told them, you know what? I am not a good person handling cover calls. I am very bad. And actually, Tom Sosnov was here 2 weeks ago, and I told him the same thing. Because what happened is. I feel afraid, or I don't know, to see one in red and one in green, and and also what I feel that cover call is a strategy that is good when the market is probably going on the same direction or probably is going a little bit up. But if it goes, like all the way up, you lose the opportunity, you lost your position, and you lost the stock. So how do you handle those trades?
Well, you see, I'm so glad that you're bringing it up, Ricardo, because it's exactly where everybody has to find what works for him, right? I mean, what works for you might not work for me. And as we just learned, it's the other way around. So, how do I handle it? Well, I've learned a very important lesson. The market has taught me a very important lesson. You're either entering too early or you're entering too late. The same is true with the exit. You're either exiting too early or you're exiting too late. So, yes, I'm always missing out on profits. There's always a better way to trade. There's always, if I would have waited a little bit longer. So for me, I'm setting my expectations. I'm looking for a modest 30 to 60% per year in return.
Okay.
If you think about it, I mean, many day traders are trying to make this in a month, right? So,
Yes.
and this is, I'm happy with this. And I think this is where it's very important. Otherwise, the market will drive you crazy. Because I don't know, Ricardo, if you experienced it, the market tries to prove you wrong. The market always tries to show you whatever decision you made was the wrong one. You should have stayed in a little bit longer, or you should have gotten out a little bit earlier. You should have entered a little bit earlier. You should have waited with the entry. The market is always proving you wrong. So, this is why I say it's important that you find a strategy that supports your goals, what's important to you.
Okay. Yeah. Just an example. Like this happened to me. Like this. Um, for instance, if I buy Amazon today, I think it's like around 185 or something like that, and all of a sudden Amazon goes down to 160, and I'll buy the cover call probably I don't know, around 165 or 170, you know. And what happened? How do you handle this if Amazon goes back to 185 or 190 and already passed your target, So how do you handle that?
Great question. So, one of the things that I like to do is selling calls or selling options with a very short fuse. So,
Okay.
I like to trade weekly options. And for example, on a Monday and Tuesday, I'm trading Friday's expiration.
Oh, the
On a
same week.
Wednesday, yeah, on a
Oh,
Wednesday, Thursday, and Friday, I'm trading next week's expiration. And this is why you see I'm a little bit more in control because can it happen that Amazon goes from 185 to 220? Yes, but not by the end of the week. Right. So this is where I'm a little bit more in control. And if Amazon gets close to the strike price that I sold, I can still roll it into the next week. I might even be able to roll up. So I think for me, the trick was to be more in control of trading shorter expirations.
okay, okay. And quick question, how do you find the right company? Do you use the RSI or any tool?
No, so I mean, I have my own tool, the PowerX optimizer, and I go for what I call value stocks. And here's how I define it. I mean, everybody says, well, go for value stocks, right? I mean, first of all, I want to see that they had profitable quarters and profitable years. So I want to say at least 4 out of the 5 quarters need to be profitable, and the same 4 out of the last 5 years. I like to look for a PE ratio, price to earnings ratio, of less than 50. Right now in the S&P 500, it is around, I don't know, maybe 26, 27, subject to change every day. So I would not trade a stock like Palantir, PLTR, that has a PE ratio of 678. That's crazy for me, right? The next criteria that I have is that I want the company to pay a dividend. Because when a company pays a dividend, it's no longer in growth mode because now they're stable and they're giving back to their investors. Another thing is that the market capitalization has to be above $2 billion. So I just have very few and simple criteria. And now I want to see that the stock is kind of moving sideways because that's exactly, Ricardo, what you said. It works perfect when the stock is moving sideways. You don't necessarily want to do it for a stock that is going up. So these are my very simple criteria. And these days, I'm no longer using indicators. I
Wow.
used to be an indicator junkie. I plotted so many indicators on my chart that I couldn't see the prices anymore. And these days, I'm really just looking for support and resistance that I can just draw with a pen on the chart.
I admire you because I have so many indicators, like sometimes I don't know where to look. You know,
I hear you.
now
I've
they,
been there. I've been there.
yeah, and now they come with new tools that measure the gamma, so I am a day trader, so sometimes I'm looking at where the gamma is, so
Hey, when I was younger, I was a day trader. I'm now 55 years old and I'm getting too old for day trading. So this is
well,
why for my lifestyle, I just like to trade the first 15 minutes, 20 minutes after the open, and then I literally walk away from the computer.
so you don't do any day trading?
Not anymore. No.
Not anymore. Okay. And tell me a little bit about your PowerX. Tell me what it is. What do you do? Tell us about
Yeah, so
your
that's
software.
interesting. You see, I'm not smart enough to program Think or Swim or Trading View, right? So this is why many years ago I hired a programmer and said, "Listen, this is the strategy that I want to trade. Can you create a tool for this?" And he did. And this is where I showed it to Mark, who is trading with me, and he said, "Oh, this is great. Can I have the tool too?" And I said, "Yeah, sure, you can have it." And so this is where eventually we said, you know what? I think it's a really great tool, fairly simple to use. And this is why we made it available to the public. And yes, now I have a development team of, I think there are 12 developers who are
Wow.
constantly adding new features, making it better because I want this to be the best trading software in the world. That is
Wow.
my goal. And so right
Congratulations.
now I'm investing around $1 million a year into the development.
Wow.
And I'm very happy where we are going, especially right now with AI. There are so many great things possible, and this is why we have been incorporating AI for more than a year already, and I really like it how accurate it is for me.
And how many subscribers? You have also Rockwell Trading. So tell us a little bit about Rockwell Trading. Our
Oh my gosh, yeah. So this is where once I started making money, and this was around 2005, right? I mean, friends and neighbors ask me, "What do you do for a living? You're just at home, and I see that you have a nice car and you have a Harley Davidson, and so what do you do?" And I said, "Well, I'll show you. Come on over." And at some point, I had more and more people showing up at my house that I decided to build a website with my brother and my best friend. So the question is, what do we call this website? I mean, if we call it Heitkoetter Trading, nobody could ever spell it. I mean, I have a complicated last name, right? So we decided on Rockwell Trading, and so for many many years it has been a hobby, and it really over the past I want to say 10 years it has been taking off. So this is why I now have a team that is helping me with this. I have a CEO who runs the company because I want to focus on trading. I'm not great in running a business at all. And I don't want to have the stress of running a business. But we have the company because we have the software. And it seems that we have, I think, 8 or 9 thousand users, somewhere around this. Don't know exactly. But yeah, they seem to love it. And so we're supporting them.
8,000 users. Eight.
Yeah, somewhere around there.
Wow, that's a lot. Congratulations. So if someone wants to try your Rockwell trading, there is any like a free version like for a week or a month? Do you have something like that?
You know what? We are just about to implement it. So by the time you guys see the video, there might be a free version or a trial version available. So best thing is just go to the website, rockwelltrading.com, fairly simple. That's where you'll find the updated information.
Sure. And also, I will put your website at the end of the video so people can click in there and go to your website. Now, how do you handle, like you have so many students and you give a lot of presentation, you actually are giving a lot of education to these students. How do you handle emotions with your students?
Well, I mean, this is the deal, right? Everybody says you should not have emotions when trading.
Mhm.
I say that's bullshit. Oh, sorry, we're on YouTube.
It's
Okay,
okay.
that's so here's the
It's
deal.
okay.
Let's face it, right? When we have a winning trade, we're happy. If we have a trade that's underwater, we're sad. If we have a loss, we might get depressed. So I think it is okay to have emotions. The important thing is not to act on emotions. This is why I think it is super important for every trader to have a trading plan. And a trading plan is something, for me, it's just a page long, but that very simply says, here's what I'm trading. As I told you, I can tell you exactly what I'm trading. I can pull up my trading plan and you'll see it in there. Here's when I enter. Here's when I exit. Here's my money management and position sizing. And number five, here might be a few other rules. And it can be fairly simple. The simpler the trading plan, the better. And then, see, I even have a mug here that says, follow your plan. So it's okay if you're upset about a trade. It is okay if you're sad about a trade. It's okay that you're happy about a trade, but keep following the plan. And if you realize, and this is why I love a trading log, we built, I think, the most powerful trading log into the software that gives you all the information you need to make adjustments to your trading plan. Because a trading plan evolves over time. I mean, you're probably trading differently than you did in 1999 when you started, right? So, as traders, we evolve, markets change. So, you have to adjust the trading plan. But I think it's very important to have a plan and not shoot from the hip. And here's why. I did it and it didn't work for me. Once I had a trading plan, at least now with every trade, I can say, is it ATP according to plan or NATP not according to plan?
Now talking about plans, like for instance, if one student has a cover call and the position starts going down deep, 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 what do you recommend to the student? What you normally do? Just close the position or start selling more calls?
Well, here's the deal, right? I mean, so when you sell a covered call, it means that you have a stock position. So what you're talking about right now, if the stock position goes down, right? So this is a classic trade. I mean, it doesn't matter whether you're trading the wheel strategy or covered calls. There's three ways, I believe. There's three ways how you handle a trade that is going against you. Number one, you have a stop loss. So you have a stop loss and you exit and you say, okay, it didn't work out. Number two, you can just wait and hope. Don't think it's the best strategy, but you know that in the markets with quality stocks, they're recovering. I mean, I traded Nvidia when it was trading at 22 adjusted. I mean, it was 220, right? And it went all the way down to 16. Now I got out of this trade profitable, and yes, I'm the guy who sold Nvidia at 22 before it went all the way up to 100. But again, right, quality stocks often recover. So here's the third way that I can do, and this is something that I learned from Warren Buffett. If you believe in a stock, buy more and do dollar cost averaging, right? If you like the stock at 185, let's use the Amazon example,
Mhm.
and you believe in Amazon because I don't see a world without Amazon. I'm sorry, I just don't, right? Amazon is everywhere.
Yeah.
You would be surprised how many packages of Amazon are right now arriving at my house. I have a problem. Anyhow, so if I like it at 185, I should love it at 160, right? Now, it's not for everybody. And yes, if you don't follow the dollar cost averaging, you always need to have some reserve capital set aside. So this is where, again, it goes back to what's the best for you as a trader? Do you feel best if you are cutting the stock loose at maybe 175? Are you okay of just holding it, or are you okay in buying in more and bringing down your cost basis?
So always comes to the plan. That's the most important thing.
It comes to the plan, and for me, I like to use a third option. I like to dollar cost average into a stock that I like.
I like that. I like that. Now, what is the most common mistake that you see in a beginner trader?
Being too greedy. I was too greedy, right? I mean, we all get into the game being fed all of these. Oh my gosh, you can make 100% a year, you can make 100% in a month. And then, especially with option trades, you see all of the advertisements. A trade makes 234%, right? And this is how I started. And I believe it's very important to get into the game with realistic expectations. And when you're new, a realistic expectation would be try not to lose money. Right? I mean,
That's a good
don't,
point.
don't worry about the winners yet. Worry about the losses. The winner take care of themselves, right? So at first, focus on not losing money, and then you get to a point where you make a little bit of money with trading. And honestly, when you do, you're way ahead of most traders who lose all of their money in the first 3 months or something like this. There's this 90, 90, 90. I've heard it somewhere. I don't know if it is true, but it says that 90% of traders lose 90% of their money in the first 90 days. Sounds could be true, right? I don't have any evidence for this, but I believe that this is true for many traders because when we all get started, we are chasing the unicorns. And then we realize, oh, that's expensive chasing unicorns. And then
Yeah,
you realize, okay, you just focus on not losing money, then you focus on making some money, and then you focus on making some more money.
yeah, that's true. Everybody starts being greedy. I was in that point, and sometimes I I am greedy again, but
Of
I'm trying to
course,
change my mind.
I mean, that's why we are in the game. Yeah,
Yeah,
I mean, if we wouldn't be greedy, we would be happy getting 4% on a CD or in interest rates, right? I mean, if we wouldn't be greedy, we wouldn't try to find a way to make 30%, 40%, 50% in the markets, right? I mean, this is the nature of a trader. I think this is what drives us to become traders, that we are not satisfied with mediocre returns. We're not satisfied with just the average 8 to 12%. We're not satisfied with whatever the S&P makes in a year. We want to make more.
yeah, that's true. Marcus, I don't know if you can show us a little bit about how your software works, or you can show us about the tool to the audience. Is there any way that you can show us?
Let me see if I can pull it up here. Yeah, sure.
Sure.
Let me see.
Let me give you 1 second.
Here's the software. So as you can see, it's fairly simple. I have a chart here, and then I'm actually drawing a line. This is what I call the lowest low indicator, and it's showing me the lowest low of the last 8 weeks, right? So this way, I kind of get an idea where has been support. Right now, we are looking at Apple, and we see that Apple typically had some support at around 220, right? Then recently, with the tariff shock, it went all the way down to 170, and now it tries to push back into the 220 range. So here's what I typically do, right? When I see something like this, I just like to draw a box. So this is as complicated as it gets for me in terms of indicators, right? And
Okay.
I like to sell options at the lower end of the box because here's what happens when I do, right? I might get assigned here, and this means that I'm buying the stock at the lower end of this range. And going back to your covered calls, I like to sell covered calls when the stock goes back towards the middle of the range. So this is kind of what I like to do. Now, in order to do this, I have programmed a scanner for me that finds the stocks that meet these criteria. So here I'm looking, for example, for this week's expiration. And therefore, I have 12 candidates that are popping up for me. And this would be AA Alcoa, for example, where we see right now, oh my gosh, that's not a bad example. So you see, Alcoa has been trading kind of in a pretty wide range here over the last 2 years between what, 25 and 45, somewhere around there. And right now, if you look at the options, we can sell the 2350 put and we get 54% annualized.
Wow.
Now, I like that idea, right? So this is a stock that I might consider. When I do, now I have a yes, no, maybe, how I can flag it for myself and say, yeah, you know what, this might be a maybe. Let's take a look at another one, right? Where we have Disney, for example. Okay. Ooh, my gosh, Disney must be reporting earnings because look at this. Disney has been beautifully trading in this range between what? Around 80 and 120. And right now, Disney, as of today's closing price, is trading at 92.17. And I can sell the 82 put, which means that Disney could drop 11% before I get assigned. Look at this right here, beautifully at where I see support. So I like this. This would be a good trade. The 82 or the 83, right, where I get 32% annualized, 42% annualized. I like this. I would say that would be a
Smile,
good
that
trade,
one. There you go.
right? So you kind of get the idea. Now, when I find a trade that I like, I add this to my calculator because now when I do and I add this to my calculator here, it tells me based on my buying power a few more things. So let me just zoom in that we can see this. So it says, okay, based on my buying power that I want to deploy for this trade, which would be 100,000, I should trade 12 options. Now, the days to expiration, super short fuse, only 3 days to expiration. However, in these 3 days, I would make $468, which means $117 a day. And if I annualize it over the year, that would be 42% annualized. I like this. And just like this, I could place the order with my broker. So, and that's the important thing. You see, for me, it's all about not suffering from analysis paralysis. So for me, it was important, Ricardo, to take things away. Yes, I can still add a gazillion indicators. We have all of this built in, but I don't do this, right? Because for me,
Simple things.
just being able to draw a box is better. See, here's another one, Devon Energy. I don't like this one. You see, Devon Energy has been in a pronounced downtrend. So let's see, what else do we have coming up here?
Quick
PE.
question. Do
Yeah.
your software links with the broker, with any broker or any
No, right now we are integrated with Tradier as a broker. The next brokers that we are integrating in is TradeStation, Cobra Trading, and TradeZero. We have more brokers coming up. So right now we are adding one broker per month, and
great.
we hope that soon we can add interactive brokers and a few others. Yeah.
Oh, great.
Yeah. Anyhow, so you see, that's kind of it. And right now, I just have to make the decision to go through these 12 stocks and say, out of these 12, which one do I like best? And so far, it's Disney.
And Disney actually they have earnings today, if I'm not.
Well, okay. Okay, this is where. All right, let me show you some more cool tricks. So yes, they do have earnings today. So let's go back and bring up Disney here. So this is where I also have built in an earnings analysis tool. So
Okay.
this is where I can analyze the earnings and see what has happened over the past 12 quarters or even more. And I see that overnight, typically, Disney is up 7 out of the last 12 quarters. I also see that on average, Disney jumps 5%. On average, Disney could also drop 5%. Now, here's how it helps me with my trading. So if I go back there, I now can plot the expected move. You see, the expected move is, let me zoom in, between 86 and 98. So that's basically what option traders are expecting Disney will do after earnings. Look at this. I can sell a put $4 below the expected move. So let's talk about the expected move. What does it mean? It means that there's a 68% probability that prices stay between these two lines. This means that there's a 16% probability that they're going above the line and a 16% probability that they're going below. That's what I like because here's the deal, Ricardo. I mean, we never know what a stock will do. We are just, as traders, we are playing the probabilities. We think, what is more likely? Is the stock more likely to go up? Is the stock more likely to go down? And here I see exactly what is the likelihood that it is going just sideways, right? Between 86 and 98, 68% probability. 16% probability that it will go below 86. There's probably, I want to say, an 8%. Actually, we see it here. There's only a 9% probability that it goes below 82. So for me, a 9% probability, which kind of means I have a 91% probability that this will be a profitable trade. For
That's a
me as a trader, that's as good as it gets. I'll take a 91% probability any day.
nice tool. I like it very, very not much. Um, quick question.
Yes.
If you have someone who has $5,000, what would you recommend? This guy is going to start just today as a trader. Would you recommend him to start with paper, to do some reading? What would you recommend to
First
this?
of all, $5,000 is not a whole lot. So here's one of the challenges. When you have a small account, you're trying to double and triple it, right?
Exactly.
The wheel strategy is not great for this. So here you have seen, I'm aiming for maybe 54% annualized return. If you think about it, on a $5,000 account, that's $2,500 in a year, right? So this means basically it's $200 per month. No trader will be happy making $200 per month. So when you have a rather small account, you kind of need to find a strategy that helps you to build the account quickly. Here's what I would do. I would probably look for quality stocks and I would look for pullbacks. I actually have a strategy for this. I call it WTF, which stands for win the fear. It's looking for solid stocks that have been going up and now shortly retracing. It's kind of a buy the dip mentality. So that's what I would do to kind of build my account. In order to trade the wheel strategy successfully, I do believe it makes sense to have around $25,000, right? And smaller accounts, it's so difficult, Ricardo, to be honest. I often tell a trader who has a $5,000 account, dude, it is so much more difficult to make money on a $5,000 account than it is on a $20,000 account. So maybe the best way is try to find a way to save some more money. Nobody wants to hear this. Nobody wants to hear this. Everybody wants to say, no, I heard from XYZ and I followed this YouTuber and he took a $5,000 account and turned it into $1 million. Yes. And he probably lost the $5,000 10 times before it took off. So that's a story that nobody tells. And I know it's not a popular story, but I just want to be honest. If you have a small account, it's super difficult. That's what I believe. Others might say, no, it's super easy. Well, good for them.
That's completely true. Thank you so much. Well, I want to thank you again, Marcus, for your time. Well, I hope that I can see you probably in another opportunity, but I would like some words to our audience. What would you like to say to them?
We as traders, we are weird, and you have to find a trading style that works for you. This is why you need to keep watching Ricardo's channel because you have different traders here. Watch different traders. See if what the trader does makes sense for you. Then dig deeper. But I think these interview style channels are a fantastic resource for everybody to find their trading style. Once you know what works best for you, then you can dig deeper into, let's say, the wheel strategy, or maybe you like credit spreads, or maybe you like day trading, maybe you like cryptocurrencies. But at first, just watch a bunch of traders here on Ricardo's channel and see what makes the most sense for you, and then dig deeper.
Thank you so much. Thank you so much for your time. To our friends from ISM, thank you so much for watching. Please don't forget, give thumbs up, subscribe. Thank you, Marcus. Have a great day. Take care.